Hey, what's up, my friends? So welcome back to this month's price action analysis for the month of May 2021. So let's dive in, right? So for such videos, right, what I do each and every month is I break down to you the trading opportunities that I'm seeing in the market and how I'm looking to trade them step by step. I talk about my thought process, my entries, my exits, my trade management, and so on and so forth. I even share with you my winners and losers, which is what I'm going to do right now. So let's get started. So the first trade, or rather the first thing that I want to share with you is Canadian against the Japanese yen. This is a trade that I took about 1 week back. So let me explain to you, what happened. So you can see that this market is a trending market. Market is in an uptrend. So let's say in an uptrend, okay, it's up. And at this point, you can see the price has retraced towards this area of value. This is a concept that I've been hammering, right, for years now. Area of value. You can use things like support in an uptrend, moving average, swing low. So in this case, the price came into this swing low in this uptrend, right? So area of value, okay, is this a swing low? Let's call it a S swing, right? Swing low. And on top of it, this swing low has the confluence of the 50-day moving average. So I just pull it out, let you see. So you can see that this market tested the 50-day moving average once, twice, and came back here for a third time. So I've two areas of value coming together. I call this a stacked area. The swing low plus the respected 50-day moving average. And finally, what triggered or what got me into the trade was this bullish engulfing pattern, which is, again, there's nothing magical about this bullish engulfing pattern. Often traders are, carried away by, hey, Rayner, what's the most powerful candlestick pattern? Which is the best one? There really isn't the best one. All a candlestick pattern does for me is to tell me, hey, Rayner, it's time to enter a trade, right? Given that all your other market conditions are met. That's it. It's just telling me when to enter a trade. So in this case, you can see that the price, right, at one point opened near the lows and then push and close near the highs of the day. This tells me that the buyers have stepped in now at this area of value and has closed higher for the day. So I enter on the next candle open, right? That was simply where I entered the trade. I have my stop loss, 1 ATR below this lows, around $85. And my first target, right, on this trade is actually around $88, just slightly before $88, around this level. Okay, so in this case, the market has went in my favor, and right now I have half the remaining position on to see how much of this trend I can further ride towards the upside. So this is a trade, Canadian against the Japanese yen. And of course, when I trade this type of trading strategy or setup, there are winners and there are losers. So let me talk about the losers right now in case you think that, oh man, Rayner, this is the holy grail, man, I'm gonna make lots of ton of money. No, right? So let me share with you a losing trade that hit me recently. So you can see again here, this is the chart of CADJPY. This is a stock, right? So previously I shared with you was Canadian against the Japanese yen. So this one was a stock trade I took back in March. Again, the concept is the same. I'm trading in the direction of the trend, okay? And for this case, the area of value is at this previous swing high, which became support, and we're back here at support again. So let's call it support. And in terms of entry trigger, I simply entered based on a rejection of lower prices. In this case, this looks something in between like a hammer and a dragonfly doji. The exact name is not important. What's important is that I saw buyers coming in at this area and helping to push the price up higher. How do I know that? Because if you look at this candle, if you interpret this, the price opened over here. Then the sellers quickly took control and pushed the price near this low of the day around $180. Then finally, the buyers, they had enough. That's enough, right? They inject themselves with a ton of steroids, and then they push the price all the way up higher, closing near the highs of the day. So this to me is a sign of strength. This candle over here is a sign of strength. It tells me that there are buyers stepping in, right, to push the price to close near the highs of the day. So with that said, I don't trade this in isolation. It's always within the context of the market, the trend, the area of value, which have met those conditions. So what I did is I entered on the next candle open. Okay, next candle open, which is here. Stop loss, again, is 1 ATR below this low, somewhere here. So at this point, right, many traders will look at this chart and look at it. Oh man, Rayner, look how horrible, right, your entry is. When you entered, right, the next thing you know, market has closed against you the next day. And trust me, it happens. No matter how good you are as a trader, you can't nail a perfect 100% entry where the market fly immediately to hit your target profit. Sometimes it messes around with your emotions. It goes in your favor, goes against you, goes in your favor, go against you, and then stop you out. And that sucks. Okay, so don't expect, a fail-proof entry. No matter how good your entry looks, right? The market will stir your emotions. I guarantee it. So what happened is that you can see the next day, market went against me. And again, I have my stop loss in place, which is over here. It's already defined ahead of time. So even if the market moves against me, I know where I'm going to get out of the trade, right? If, it moves against me. So what happened next is that the market eventually went back in my favor. But for this trade, right, my first target initially was at this $240 price point. So this is where I'm looking to take profit if the market moves in my favor for the first half of my position. So let's say I sell 1,000 shares. 500 shares, right, will be exited at this $240 price point. But what happened is that the market went in my favor and then started retracing, pulling back. Okay, so let me share with you where I did not do well. So when it comes to my trade management, what usually I should have done is that I noticed that the swing high over here now has gotten lower. This is now the new swing high. So this is now a level where potential selling pressure could come in and push the price lower, because this is now a swing high, swing low, support, resistance, right? These levels, right, form all the time. Okay, so this is why you have higher highs and higher lows in the market, range market, because all these levels are continuously forming. So if you are a trader, you should pay attention to the new levels that are being formed all the time. So again, I didn't pay attention to this, right? I was hoping that the market could eventually fill me at this high to get a better price. But then what happened is the market retraced against me, as you can see over here. In fact, it retests this level another time. But again, me, not wanting to take the small profits, eventually the market went against me, came back here again, and giving me another bigger clue that, hey, this is a bearish engulfing pattern. It's conservative, right, to exit half your position, right? Forget about taking profit at this highs over here. Be conservative, take something off the table here. I didn't. Eventually, what happened is that the market reversed and then bam, right, gotten me stopped out for a loss. So had I paid attention to what the price action is telling me, getting rejected numerous times at this swing high, this trade wouldn't be a loss of 1 hour. Probably would be just a break even, because I exited half my position in profit. Let's say half the position were exited over here. Okay, let's say half exited in profit of, let's say, 0.8 hour, for example. And the remaining half is a 1 hour loss. Okay, so this one is plus 0.8 hour, this one is minus 1 hour. So if you do the math, right, overall the position, I should be a loss of about 0.1 hour, 0.2 hour at most. Again, didn't happen for me. So this is a loss that I took. And again, just sharing with you the thought process from my entries all the way to exits and even the trade management. Okay, so with that said, right, let's move on and look at a couple of trading opportunities for this coming week. First one, Swiss franc against the Japanese yen. So you can see over here, this market, again, it's in an uptrend, series of higher highs and higher lows. Higher low, higher low, higher low, and higher low over here. This is quite a minor one. So anyway, I am bullish on this market, and where I'm looking at for trading opportunities, number one is at this 118.60 level. Looking for the market to pull back, retrace into this area where previous resistance could become support, and looking for a strong bullish close back above it. Okay, if we can get a bullish price rejection in the form of a hammer, a bullish engulfing pattern, I'm looking to enter on the next candle open. Stop loss 180R below this low, somewhere here. Target wise, right, looking to exit half my position before this swing high. That is for Swiss franc against the Japanese yen. And of course, when the market makes a pullback, it doesn't mean it has to pull back to the area, to the level that you're looking at. Sometimes it could go to other levels. So another secondary level that I'm looking at is this swing low over here. So from the looks of it on the daily time frame, it might be difficult to time your entry because it's a short distance right before it reaches this swing low on the daily time frame. So this is where you can use multiple time frame analysis in your favor. Like for example, on a 4-hour time frame, this swing low now becomes much more apparent. Now this is like an area of support, right, on this 4-hour time frame. So what I'm looking for is for the price to pull back into this area of support, right, and give me a bullish price rejection. Price reject this area of support, close back above support. I'm looking to enter on the next candle open. Stop loss again will go 180R below the low, somewhere here. First possible target just before this swing high for my first target. Okay, so this is Swiss franc against the Japanese yen. So moving on to stock, let me share with you one stock that I would say it's worth keeping a lookout for this coming month. So this is stock Vericel Corporation. So a little bit of a earnings background. So this stock has been beating earnings expectations. If you just click on this E over here, okay, not quite for this one here. This one here, this previous quarter beat earning expectations. This one here as well, previous last 3 quarters, and then the last 4 quarters as well. The most recent quarter, it didn't quite beat earning expectations, and that kind of explain, right, this pullback that you have seen over here. But still, that doesn't mean that this stock is, cannot be traded, because if you look at it again from a technical standpoint, the trend, it's still towards the upside. Great. And where is the area of value? Again, this one over here, previous resistance, which could become support, and we're back here now again. So I'm looking for a bullish price rejection for the price to come into this area of support, reject it and close back above support. Looking to buy on the next candle open, stop loss 1 ATR below the low. My first possible target will be again just before this swing high. So this is a trend continuation trade right on this healthy trending stock that I'm looking at. And by the way, if you've enjoyed such market analysis, right, looking to trade in the direction of the trend, then you can check out, right, Pro Traders Edge. This is a service, right, that I offer on a weekly basis. Each week you get a Pro Traders Edge report where I break down to you the best trending markets that I'm looking at right now, and I share with you, right, my entries, my thought process, the why behind the trades. So similar to what you've just witnessed, right, just that we are doing it on a more frequent basis, on a weekly basis, and I cover much more trading opportunities, right? So for this video, I covered with you 2, but on a weekly basis, you can get anywhere between 4 to 8 trading opportunities each week. Then you also get insights to a technical trade report from Mr. X, right? The details are over here. Basically, he helps you identify the key levels in the market, so you know which direction to trade, where to enter your trade and stuff like that. You also get access to my premium trading strategy guide. So in other words, all the blog posts that you see on Trading with Rayner, we converted into a PDF file so you can download and read them anytime you want. Plus, you have access to the backtest research lab, so you know what works and what don't in the financial market. So again, right, this is a Pro Traders Edge. If you're interested to be part of this, to get this membership, I'll put the link somewhere below this video. And again, there's a 30-day money-back guarantee. If you think it's not for you, feel free to ask for a refund. We'll refund you every single cent. So with that said, right, hope you got some value out of this video. I will talk to you soon.